Hey everyone, Frank here with your latest 890 Capital update. Thanks as always for tuning in. Today I'm going to walk you through where the fund stands, some insights from the real estate market, both locally here in South Carolina and nationally, and tell you a little bit about what we've been working on behind the scenes to continue delivering strong, secure returns for all of our investors. It has certainly been a wild few weeks in the economy with tariffs and market fluctuations, so we would like to underscore the reason for creating this fund in the beginning. 890 Capital is an avenue for creating steady and consistent returns. So if your portfolio needs steady growth and something that returns more than a CD, let's chat. So let's start with the fund performance. As of the beginning of this April, here's where we stand. Our total capital raised is $7 million, with loans funded to date of 41, and 15 of those loans have been completely paid off. 100% of the capital that we've raised so far is being put to work in active loans and active deals. All of our active borrowers are current with their payments, and we continue to see strong repayment performance across the board. All investors are receiving their minimum 10% annualized payment on a monthly basis by the 5th of every month as well. Now for our borrower and underwriting update. We continue to expand the diversity of our borrower base while staying disciplined with our underwriting. Every borrower we work with is a top-tier real estate investor with a strong track record and a personal guarantee in place for every loan. We continue to focus our lending primarily in Berkeley, Dorchester, and Charleston counties, as there's ample deal flow and very good deals that are in our backyard. Knowing this market and being able to underwrite these deals precisely is what sets us apart. Our average loan size is $269,000, with our average loan to value of 68%. 100% of our loans still remained securitized by first position mortgages. The markets we're currently serving are still in that Charleston, Dorchester, and Berkeley County area, with towns including Somerville, Hanahan, Charleston, Walterboro, Quinby, 96, Monks, Johns Island, Little River, Lincolnville, Goose Creek, Ladson, and Cross, among others. We have also partnered with a couple of third parties to help provide additional capital to borrowers in the case it's needed. This capital will allow us to diversify our borrower pool while making sure that we maintain our standard of underwriting. Behind the scenes, we've been spending a lot of time with our investors and borrowers local to Charleston here. We're going to begin a bit of a roadshow later this year to meet with more investors around the country, and we'll also be scheduling some Zooms on that as well. We are also going to be attending the South Carolina Medical Association's annual event at the end of this month. We really hope to continue to build deeper relationships with the area's physicians and provide an opportunity for them to tap into real estate investing market while limiting the overhead complexity and the unnecessary hassle. Now let's zoom out and take a look at what's happening in the real estate market, especially here in South Carolina and in southeast of the United States. Let's first talk about our core counties here in Charleston. So Charleston County, the median home prices climbed just over 13.5% to about $727,000, with an average price exceeding over $1 million. Inventory surged almost 42%, and homes are now spending an average of 48 days on market, up from 33 days a year ago. In Berkeley County, the median price rose to $413,000, up about 6% from last year, and inventory rose about 12.5%, with average days on market increasing to 48 days, reflecting slightly slower sales despite stable demand. Average prices are up 6.7% year over year. Finally, in Dorchester County, the market is a little bit cooler here, with a modest increase to the median home price to about $387,700. Closed sales dropped by about 21%, but inventory rose 23.9%, and homes are now spending about 46 days on market on average. So overall, Charleston County remains the most dynamic, with strong price growth and buyer activity. Berkeley is showing steady performance with moderate appreciation, while Dorchester is stabilizing with fewer transactions, but still holding pricing power. These trends confirm our strategy to remain focused on high-demand submarkets and well-secured loan positions. We get the question often, is there still that much of a market for fix and flips in Charleston? The short answer is yes. While the markets overall fluctuate, our network of professional fix and flip borrowers consistently deliver, and they know how to find those diamonds in the rough. So the fix and flip market remains strong with steady demand for renovated properties. Now onto the national market. The US fix and flip market continues to show signs of stabilization as we progress through 2025. In the first quarter, approximately 68,000 single family homes and condominiums were flipped, and that represents about 8.7% of all home sales nationwide. This marks an increase from 7.7% in the previous quarter, indicating a modest rebound in flipping activity. Gross profits on typical home flips rose to just over $72,000, up from $65,000 in Q4 2024. The average ROI improved to 30.2%, reflecting a positive trend after a period of declining margins. Investors are adapting to the current market by focusing on cosmetic renovations and targeting properties in areas with strong demand and limited inventory. Regions with older housing stock are continuing to present opportunities for value-add investments, particularly where buyers are seeking to modernize their homes. So we look at regional performance, the Southeast really remains a hotspot for fix and flips. In Q1 2024, Warner Robins, Georgia led the nation with flips comprising 18.7% of all home sales. Other Southeast metros like Macon, Georgia were about 17%, Fayetteville, North Carolina, 15%, and Atlanta, Georgia, about 14.7%, also reported high flipping rates. Conversely, some markets in the South and West, such as Austin, Texas, and San Antonio, Texas, have seen a reduced profitability with gross profits significantly lower than the national average. Overall, while the fix and flip market faces challenges, strategic investments in high demand areas, particularly in the Southeast, continue to offer attractive return for real estate investors. We remain confident in our core markets and will continue to focus on strong collateral and disciplined lending. Looking ahead, we're excited to continue building on this momentum. We'll be continuing to raise capital from new investors and exploring a few partnerships with other institutional capital providers. If you know someone, anyone who should be investing with us, another doctor, business owner, busy professional, someone that just isn't exposed to real estate but wants to be, we should connect. Just forward them this update, have them email me at frank@890capital.com or find another way to reach out to me directly. And as always, thank you for your trust and support. We're grateful for this community of investors and friends, and we're always here if you have any questions or want to catch up directly about real estate, about Charleston, and about the markets. We'll see you at the top.